Welcome back, passionate investors. I'm your host, George Roberts, the author of Passionate Living Through Passive Investing. And today I have the pleasure of interviewing Robert Rolih, author of The $1 Million Decision. Investors, what if the financial industry has been playing a game rigged against you all along? Robert Rolih discovered this the hard way after losing most of his fortune by following advisors and so-called experts. Determined to uncover the truth, he spent years researching the hidden forces that quietly drain investors' wealth. Today, as an international best-selling author and long-term investing mentor, Robert helps busy professionals take back control of their financial future with simple strategies that actually work. And now it's time to bring on our fabulous guest for the day, Robert Rolih. Welcome to the show, Robert.
Yeah, thank you for inviting me.
Yes. So let's go into some more of the psychology. I love how you savage these gurus and prognosticators. We have far too many of them, particularly your story about the Elliott wave theorem. I mean, that's somebody who was, as I understand, I don't think he was even famous or well
Yeah,
regarded in his time. Nobody followed him, but people have picked up his theory since then
yeah,
and
yeah.
tried to apply it. As far as I can tell, well, actually, it's not just me. I mean, studies have been done. It doesn't work.
Yeah,
So,
it
so
doesn't
what is it
work.
in our psychology that causes us to want to continue to follow these gurus, even though,
Yeah,
and it's not just you pointing out that their records are just horrible.
yeah.
What is it? Is it something in our DNA?
Yeah, and also the doomsayers. There are a lot of investing experts who are always predicting doom and recessions and stock market crashes. For example, again, I have great admiration for Robert Kiyosaki, Rich Dad, but he has been predicting the biggest stock crash in history since 2012, every single year. So sometimes when it comes to investing, you need to be an optimist. Okay, you need to believe that the world will be better tomorrow than it is today. And if we take a look at human history, we are living in the best of times. Never in our history we had so many great technologies. We never had such a great standard of living. We never had so much opportunities, so much funds, so many things to buy, and so on. And the world will probably be in 10-year time or 20-year time. It will be even better. But a lot of these investing experts they always seem to predict some kind of big recession and some kind of downfall of the human race and so on. And they are scaring people with these headlines because also the newspapers and online media. They, of course, love negative stories because people click on negative stories, on headlines that are scaring people.
Yeah, if it
This is,
bleeds,
of
it
course,
leads.
yeah, clickbait, and this is doing a lot of harm because people get scared every time that they see these predictions and they sell. And usually they sell at the worst possible time. For example, we had the tariff scare in April this year because Trump had all these tariffs and all the experts were predicting big recession and doom and gloom. Now, at that time, the stock market went down 40%. And a lot of people were selling in panic. Now, this was also, if we back, it was one of the best opportunities to invest. So I'm very happy that at that time I issued a couple of great buy signals, and I was telling my followers, I'm buying, I'm buying, I'm buying. This is a great opportunity. But if you are too scared, if you are just reading these headlines, of course you are clicking on the sell button because you are afraid that you will lose all your money. Yeah. So this is interesting. Yeah.
Yeah, absolutely. Myself, no fan of tariffs, and yet the market overreacted, not
Yeah.
just to that, but to just about every bit of bad news.
Yeah. The
And
thing is that our governments are printing money all the time. And this money ends up in assets over time. So that is why we have real estate is going up, prices of real estate are going up, prices of gold, precious metals are going up, prices of Bitcoin are going up over time with ups and downs, of course. The stock market is going up. All the assets are going up. Why? Because of money printing, because of money printing. This is, of course, the stock market also goes up because it adds value, because companies create new value. But of course, the second reason is money printing. And they cannot stop printing money because we all have these huge debts and fiscal deficits. So the only way out is basically printing money. And that is why asset prices, if you have a long-term view, they will go very likely up.
Yeah, absolutely. That asset inflation is a huge part of the reason we've seen assets increase, or I should say inflation is a huge
Yeah,
portion of the asset inflation. And yeah, another good example, this just happened, the government shutdown. It wasn't a good
yeah,
thing, but for crying out loud, the stock market went up about 1.5% the
yeah,
day that the Senate passed the spending bill. And I mean, that's just crazy. I mean,
yeah.
it wasn't that bad. And when they ended it, it wasn't that good. So overreaction in both directions.
Yeah, yeah. Yeah, but also, the markets get used to all these shutdowns because it's every time it's the same. It's all the drama, but in the end, it's the same story every time. Yeah,
Yeah, exactly right. I mean, I haven't done the study, but I mean, what government shutdown are we on? I mean, it happens all the time during every
yeah,
administration, and just again and again, always the same. But yeah,
yeah,
that asset inflation is really serious. I think that I should probably start to value. Maybe I should release an index, the S&P, in terms of ounces of gold, something like
yeah,
that.
yeah, yeah.
Anyway, I'll
Uh,
work on that. But
Yeah, the thing is
so.
that the biggest mistake when it comes to investing is that you are in cash, that you keep cash. This is one of the biggest mistakes because in the old times, decades and decades ago, you took a risk when you invested your money. But now you are taking a huge risk when you don't invest your money because you can be pretty sure that in 5 or 10 year time, the purchasing power of your money will be much, much, much lower than it is today. And this is a given. So you are
Sadly
taking a
true. And of
huge
course,
risk. Yeah,
yeah, and probably we don't even need to go into the way that the statistics have been cooked, and they've been
yeah,
cooked by
sure.
every administration. It's not even a
Yeah,
matter
yeah.
of not even a matter of politics.
Yeah,
It's
the
bad what they
the
report to us, and the reality is
CPI
even
is
worse.
is basically just tracking some basic stuff and a lot of stuff. If you are well off, inflation numbers are really not relevant for you because you are buying all sorts of other things that are not included in the CPI. So,
Exactly right. You're enjoying the asset inflation. But anyway, I think from our discussion, it's pretty clear we agree that the basic financial services industry, most people are getting ripped off, and there's a lot of bad players out there. Even I think the honest ones, as you mentioned, they're really not serving the clients well because they can't perform, right?
yeah,
Particularly as before the fees, after the fees, definitely not.
yeah.
So, clearly we agree that your average money manager is not the way to go. But tell us how your approach to helping clients differs.
Well, I am not a financial advisor. I don't recommend any specific products or services or whatever. So I am totally independent and I only share my experience and my knowledge. And that is why I can be impartial. I can really tell people how it is. And I also use this, what I call the reverse psychology of investing. Previously, I told about this example, Trump tariff chaos, when the markets went down sharply. At that moment, I'm very good at spotting these moments and letting my followers and members know that I am buying heavily at such times. If they were on their own, they would be probably panic selling, but
Mhm.
because they follow me, they take advantage of these downturns. Let me give you one
Yeah.
great example. In 2022, when Bitcoin crashed from 66,000 to 16,000, and Jim Cramer on CNBC was telling people, get out of crypto while you can. Everything will go to zero. Just one day later, after I saw this on CNBC, I sent a huge buy signal to all my members and I said, I'm buying Bitcoin.
So I
And
love
then
it. You
Bitcoin,
don't really have to believe in Bitcoin. You're just essentially doing the anti-Kramer in that
yeah,
case.
something like this.
Yeah,
So
recognizing when things are overdone.
yeah, because at that time nobody wanted to buy Bitcoin. Nobody was talking about Bitcoin going to zero. But first you need to understand the asset that you are investing in. You need to understand what Bitcoin is. And of course, I did a lot of research on my own, so I know what is Bitcoin. This is digital gold. It's a gold for new generation.
You know,
It's
the call is
improved gold. And because I understood what Bitcoin stands for, what is the technology behind it, that it will not go away next year. And because I saw this panic in the market and I saw Jim Cramer, I was pretty confident that this is a good buying opportunity. So yeah, when it comes to investing, you need to understand the investment. Otherwise, you will never be able to confidently buy something when it goes down, for example. So you need to understand the investment, but then you need to practice this reverse psychology of investing. I call this, and this is very, very profitable. So yeah.
yeah, very profitable. I should probably be watching Kramer this evening, just
Yeah.
see what's going on.
Yeah,
Okay,
he's a great contrarian indicator. He's not always wrong, but he is wrong quite a lot of times.
that's right. You only have to be right, maybe 55% of the time you can
Yeah,
do quite well in
correct.
this business.
Correct.
So, one of the things I like about your book, I think a lot of the people I have on this show, they're really just talking to people who are already very financially savvy. We're talking about people who are already investing in private markets, etc. They may know about a lot of the products that you're discussing. But I think that's actually a huge strength of your book. I think people at any stage in their investing journey can benefit from your book. I certainly did. So, a lot of our listeners like this concept of infinite banking and they like these whole life policies. But you're telling people just go for the term life insurance. I think we're really just talking about two different populations of
Yeah,
people.
these are
Is that the
totally two
case?
different things because what you are doing is something totally different. Because term life insurance is just like simple insurance, simple life insurance where you don't have any investment component. And if you are just looking for something that will insure you for life, that's it. But if you are looking for something else, like you are teaching, it's a totally different thing. Yeah, of course.
Yeah, absolutely. Yeah, just curious about that one because yeah, I completely agree with you on the whole life unless you're really using it for something like the
Yeah.
infinite banking. I mean, I got rid of my policy at one point, took a little bit of a hit on it, but it was something I did early in my career. I think you mentioned the same thing in your book. When you get to a certain point, you don't really need that life insurance policy.
Yeah.
It doesn't do the same thing it did when you had, kids in school and
Yeah,
mortgage,
it
etc.
it's totally if you have kids, if you have mortgage, of course you need some kind of life insurance. But when you are already financially well off and maybe financially free, there's no point having life insurance in most cases.
All right, great. Now, so if we could distill it to a sentence or two, what would you say is your overarching investment philosophy?
I would say investing is simple. It's the financial industry that works hard to make it complicated. That's actually one of the most quoted lines from my book, and it basically gives you the basic truth about the financial industry. So yeah, investing is really simple. You need to learn about some details. You need to know what you are doing, but after that, it's simple as pie.
Yeah, I love it. It reminds me of a quote from the famous Dutch footballer. I can't remember his name, but he said, "If I wanted you to understand it, I would have explained it better."
Yeah.
All right. Can you tell us a belief that you've strongly held, which you have recently changed?
Maybe one interesting belief was about the crypto market. In the past, I used to invest in quite a lot of smaller crypto projects, but recently I totally changed my approach and I'm only investing in Bitcoin and just a couple of the biggest crypto projects because I see now that everything else will basically go to zero. So crypto space used to be very interesting because smaller projects, if you picked the right ones, could give you a very nice return. But the market totally changed in the last couple of years. There are too many small projects and so on. So I'm just sticking with Bitcoin. and a couple of big infrastructure projects, and that's it.
Mhm.
Because I see that everything else will gravitate towards zero because there are too many projects and the finite amount of liquidity. And there are millions and millions of projects, and it's mathematically impossible for them to succeed because there are too many of them. Yeah.
Right. Well, my favorite story regarding that is I think it was one of those online universities like Udemy. They sent me a course one day, said, create your own initial coin offering. And I thought, this is it. Even if this digital currency takes over, I don't know which one. And
Yeah, it's like if you are looking to find some profit in these small coins, it's like trying to find a needle in a haystack. So it's almost impossible. So I don't even try. Yeah.
All right, wonderful. Well, here, I would love to head into our lightning round.
Okay, yeah, we can do that. No problem.
All right, okay, good, good, good. All right, this will be fun. All right,
Yeah,
so Robert, if you could be known for only one thing, what would that be?
simplicity,
What is one
changing
mistake?
complex into simple.
Yes, I love it. I love it. What is one mistake that has taught you the most?
Losing 50,000 euros trading forex
Yeah, yeah, I
in
love
the
it. The
start of my
candor in your
career.
book is very beautiful. I love that. What
Yeah,
personal characteristic has been most pivotal to your success?
focus. I know how to focus.
And then let's have a random question. Just tell me when to stop cutting the deck.
Now,
Okay. Would you rather meet your great great grandparents or your great great grandchildren?
oh, grandchildren. Yeah, definitely.
Okay, nice. Yes. I
Because
think that's a
my
good.
grandparents were probably farmers somewhere working on the field, and it wouldn't be so interesting as meeting my future.
Yeah,
um,
George Jetson.
yeah.
Okay. What's one tip that investors can implement in their business today?
Just start. Just start. If you are not investing already, just start. If you are already investing, continue investing regularly. Regular investments are the best way to go. Don't try to time the market, just regularly invest, and that's it.
Great advice. And can you give us one book that every investor should read?
How a second grader beats Wall Street.
All right.
That's a really good one, and it dives deeper into the difference between index funds or ETFs and mutual funds.
Okay, great.
It's
Well,
a
I
really
have not
good,
read that, but I have read A Random Walk Down Wall Street
yeah,
by Barton Malkiel. I imagine
that's
it's
also a good
similar
one. Yeah,
ideas.
yeah, yeah.
Yes. Just get that monkey, buy your monkey, feed it well, and give it some darts and a dartboard or something
Yeah.
like that.
Yeah.
Okay, can you send us out with a quote to help forge our listeners as leaders and entrepreneurs? Any favorite quotes for you?
um, on top of my mind, I would maybe go with Brian Tracy's quote: "If you want more luck, take more chances, talk with more people, show up more often." So luck is predictable.
I love it. And so true. Yes. The more at bats you have, greater likelihood of that home run. Definitely. We have to
Yeah,
work hard to be lucky.
yeah.
And so, one final question: email, website, carrier pigeon, or smoke signals? What is the very best way for our listeners to get in touch with Robert Rolih?
Definitely smoke signals. Just go to my website. It's robertrolih.com. So Robert, ROLIH.com. I also run a 90-minute free masterclass, online masterclass for investors. It's totally free of charge, where I teach all about long-term investing, my best investments for the next 5 years, and so on. So it's a great masterclass. When you go to my website, it will be on the top.
Great. So if you want to reach out to Robert, go to the website. I think we'll leave the smoke signals to the traditional financial services industry. And with that,
Yeah.
I just want to thank you for taking the time to share your knowledge and experience with our audience, Robert. Thank you.
Thank you. You're welcome. It was great. Thank you very much.